Busiest week of the entire earnings season coming up this week. A lot of big names reporting. Do you believe the earnings from the Magnificent Seven, will it justify the high valuations for those names and just the high valuation for the market overall?
We think they're going to print some really good numbers. And so we think that they're going to justify to some extent. But the reality is, how will the market react to that? They've had such lofty valuations over the past year. And while earnings continue to grow, their balance sheets are strong, the opportunities are still there. It's really a matter of what the value is going to be placed on those holdings. And with 5 of the 7, as you note, coming out this week, I think you can put a little volatility to the markets.
All right, so you're looking for some volatility. One thing that's really sustained the markets and pushed it higher is consumer spending. I know that's something that you're watching. So consumer confidence estimates are for an increase for back-to-back months. But last month, in that report, they said those increases, they were mostly driven by households making over $125,000 a year. What is that bifurcation? What does that say to you?
Well, we think it's the best of times and the worst of times. So for the low-income consumer, things have been challenging as inflation has continued to eat away at their spending power, while on the high end of the market, the luxury goods makers continue to print good numbers and high-income consumers are still able to spend. And so we really think there's been this bifurcation along the spending patterns. We do think that the reports of the U.S. consumer's demise have been greatly exaggerated, and we think that the U.S. consumer is still in relatively good position. The challenge is just that on the lower end, inflation is really hit harder than on the higher end.
Do you agree with our Jim Cramer that to be in the Magnificent Seven, you have to be basically divorced from consumer spending and economic trends? And do you believe these names, these Magnificent Seven names reporting this week, do they fit that category?
I think they're still to some degree impacted by consumer spending, particularly when you look at names like Apple and you look at names like Amazon. And yes, they've transitioned a bit, but the reality is they're still going to be somewhat impacted by consumer spending. But what they do have going for them is their ability to continue to generate significant levels of free cash flow with strong balance sheets without the need to have to layer on more debt. And so to a certain extent, investors love the ability to continue to put money back to work into those names with the confidence level in that earnings power.
All right, one other area I know you and your investment committee have been recently talking about is China. It's pretty fitting today. We're looking at Evergrande shares under a lot of pressure, Hong Kong court ordering the company to be liquidated. You're worried about China risk. What is the big risk to other areas of the global economy, other markets in your mind when it comes to China?
We think the big challenge is that China impacts so many other parts of the economy. And so whether you're a multinational that is selling into China or you're a multinational that is utilizing China in terms of production and services, the reality is it's hard to get a hard feel for the numbers coming out of China and what the real state of the economy is. And so as we look across the landscape of companies on a global scale, it's just hard to know exactly how much impact will be there. What we do believe is that we're going to continue to see a slowdown in spending from China. And so that will put a bit of a detriment to a lot of the revenue growth that we may have seen for some multinationals who are looking to China as a key source of growth going forward. But more than anything else for us, it's a hard to ascribe a valuation to something where the underlying data is hard to put your thumb on.